YouTube, this TerrenceRe, and I got a stock market update for you. We're going to talk about the FAANG stocks that's falling. We're going to talk about maybe some trades that's possible and what you can do to maybe protect your portfolio from falling with the market today, right after the buffer. All right, let's take a look at right now. So this is the little small account or whatever you want to call it, small account challenge, whatnot. Where I show you guys how we're gonna take a small account, and my goal is to try to double this thing if I can this year. So let's see. Right now, I got a SPY short call on. I'm gonna cancel this working order. That was just something just to get me out. So I'll go back over. I'll put it back on just to show you so you'll know how to do it. So I sold let's go to the option chain. Let's take a look at this. I sold right here. I sold this call option at the 477 strike, and I bought the 482. Sold one, bought one. That is called a short call spread. Basically taking a bet that the market will go down, right? Or just not come back past this area. You can make money either way. So right now the position is up on the day, because it was down on the day. It's up 58 bucks. Overall, the position is up 27 bucks. And I got 31 days to expiration. Still have a 75% probability of profit on this trade. Right now, let's take a look at what we got going on in the market. So let's hide. I'm gonna hide the indicators, and then I'm gonna hide drawings, and basically we just got a naked chart. So I'm just doing that just so we can, come on now, there we go. All right, so basically right now the VIX futures are up 5%, and then you see the VIX is up 15%. So we got a 22 on the VIX. Right then and there, that'll let you know that vol has increased in the market because the market is down. The spools, the S&P 500 futures, are down 64 handles. The NASDAQ is down 229. The Dow, which is right here, /YM, is 532. And /RTY is the Russell. Those are your small caps. They're down 34 handles. So basically, all four major indices are down 1.5% for the most part on the day. The bonds are down as well. The notes are down, and oil and gold is up. Gold is basically flat. Oil is up almost 2%. So we got oil at 84, and oil is ripping. And you can also kind of see it in the XLE, which is energy, which is up a little bit too, which isn't completely oil, but it does track it. You can get exposure to some oil in the XLE, which is an ETF of energy stocks, basically. So what we got going on, we got FAANG selling off, and we also have the banks selling off. So FAANG is basically Facebook, Apple, Amazon, Google, Microsoft, and Netflix. I kind of put NVIDIA in there as well. And you got AMD. I added AMD. That's not the original. The original FAANG is just Facebook, Apple, Amazon, Google, Netflix, right? And if you look at, and you can throw Microsoft, I got about how many? 1, 2, 3, 4, 5, 6, 7, 8, 9 top tech stocks. All of them are down except for Tesla, which is flat. Tesla's up like $5, which really ain't nothing for Tesla. So it's flat. You might as well say. Why we have the sell off today is because the banks are down. Mainly Goldman Sachs, which is in the Dow. and Goldman Sachs is down 8% today. So really doesn't matter to me what the news is. If you want to know, you can Google the news. I probably could look it up and tell you what the news is. But for me, I don't really need to know what it exactly is. I can just look at the chart and see that it's down. Why really doesn't matter, because it's taking, with the banks being down, that's going to bring the S&P 500 down. So that's why the short call spread that I have is making money today, right? You can see it's up 60 bucks, 59 bucks on the day so far. And I'll continue to, I'm thinking about, because I'm way up here with it. So one of the adjustments that we could do is roll down, right? You can roll down um, into this and pick up more premium and reset the actual spread. Be honest with you, I don't really want to do that um, because I'd rather just hold it and just stay here for a minute. I would rather the market continue to go down. I take my 50%, which is what you see here. So to close out, because we sold it to open, all I do is I click here. So I highlight the call spread that I bought. The call spread that I sold and the call spread that I bought. Right click in here. Now, this is, from what I understand, I've only been able to do this on Tastyworks. My close profit is at 50%. I click this arrow here, and it's going to automatically set up for me to buy back, to close this option spread. I sold it to open. I'm going to buy back the close at a price of 60 cents, which will leave me a profit of 59 bucks because I sold it and collected 119. I got it on GTC, which is good to cancel. I click review. It's going to tell me everything here. Click send order, and then voila. So that way, so like if you work in a job or something like that, you don't have to sit here and watch this. You'll get a buzz, your phone will vibrate or whatever, a ding or whatnot, and then you'll see, and you see it says working, and then that order will work all throughout until you close, till you take it off, until for 31 days, right? So I have that set up. Now let's take a look at some other things, what's going on. Let's actually look at some charts in the market and see what's going on. I want to look at Microsoft. So looking at Microsoft right now, we can see, and this is sort of like, I actually made a post. If you follow me on Twitter, look down in the notes. I think I got my Twitter handle. It'll be, if it should already be down there, but if you look in the description of the video, you'll see my Twitter handle. And I post charts of little markups. And I posted this bear flag, I think on maybe Friday or Thursday or something last week, maybe this weekend, I don't remember. But sometime I posted recently. I posted this bear flag, right? So I'm gonna put all my drawings and stuff back on here. See how I put my Fibonacci's from the top to bottom, pull back, hit this level, got a wick. This big red candle took out this low. It's a bear flag, right? So this is something right here that I actually would like to get short. I was kind of hoping, I don't like to get short on short days though, like when the market is already down. I would like to see, to be honest with you, to see Microsoft come up and pull back up into here somewhere, and then for me to sell and get short. My way of trading is to sell. I want to go into the strength of the market. The market going down, I want to buy while it's going down, and I like buying the dip. But I also want to get short while it's going up. See, that's the part that I think that retail trade misses, and that's the little nuance to trading. Like, we only look to buy dips, and everywhere you go on the internet, people are telling you to buy dips. Just reload and buy more and hold. And you don't just necessarily have to do that. You can do the opposite, right? It's just it takes you just have to learn how to do it. But once you do it, then you can trade both sides of the market. You can own your stock and then sell calls against your open positions, or sell call spreads or whatnot. So you don't just have to hold while it's going down. You can make a little money while it's going down. Something like Goldman Sachs, though, I wouldn't buy this dip. And so when you look at it now, what I have right here is just a 5 month of Goldman Sachs, right? But if you look at the banks overall, look at where it came from. So if you look where it came from, now this, I backed it out a year from February all the way down at 271. You still, I don't know, you're not even 50% of this move from here. So I think that the market, and this is just my own personal opinion. Look, and then when I back it out 2 years, look, so we're not even nowhere near like going back over where the market has been. And I just think that there's a lot of geopolitical risk out here in this market. And you see, I'm going back 3 years. Look at it. Especially with going over and I don't know if everyone has if you haven't had a chance to check out, I'm gonna kind of shift and go a little bit. If you haven't had a chance to check out the All In podcast, I think that's their most recent episode, and that's with Jason Calacanis, Chamath Palihapitiya, David Sachs, and Jason Freeberg. I like the podcast. They're candid. All four of them, from what I think, are billionaires. So, they give their honest opinion. At least I think, anyway, about particular issues. And then this most recent one, they talked about human rights issues, and they were talking about the issue with China, and I think the way it's pronounced is the Uyghurs, and some things that may be going on over there, right? And so there were, now I'm not getting political about it. I don't know a whole lot about it, other than about the same amount that if you're listening to this, that you know. But what I got from it, and I would advise everyone to go check it out. I think it's a real good listen. I definitely learned some things listening to their different points of view. But the main thing that I picked up, aside from everything else, was the risk that we have, that the stock market has, the risk to the stock market of our tech companies in China. Because if if the if the people in this country continue to call on companies like Apple, Tesla, and other companies to watch how they do business with China, that will affect our stock market. That will affect tech, right? Um, and so they got into a dialogue about China, and some of the things that they have going on there, Taiwan, and so once you start getting into that, and then we have to monitor what's going on with the United States and Russia currently, with Russia and Ukraine. There's a lot of geopolitical risk out there. And so people will be saying that, Tesla has these great numbers, and they do. They have some great projections. But looking at the market doesn't care about those projections. It just doesn't. Whatever projections, they've been had the same projections. They've been had good numbers, but since November 4th, you got a whole bunch of sideways action for the last 2 months. Nothing's changed. It ain't like they went from being an awesome company here to being a bad company here, to maybe getting more awesome here, to maybe getting bad here. None of that has changed. Like nothing about what they're projected to do has changed. If anything, it's gotten better. So why is the market going sideways? Right? The market sees risk. It sees it. The market sees the risk. It's there. That's why you have a elevated volatility index, because the fear is in the market. Nothing has changed. Look at Netflix. Everybody I know has a Netflix account. Everybody I know has a Netflix account. So why is Netflix going down from here to here? What changed? And this is hideous. Whatever changed, it didn't change that much, that fast. So it went from sugar to you know what in 2 months. Look in the video. What has changed? It's still hard to get these graphics cards. They still, from what I understand, make the best, if not the best, one of the best graphics cards out here. A lot of gamers use them. So what has changed? What has changed about AMD? So that's the that's the thing that I wanted to talk about, and that's why I said stock market update in this video. When we talking about the sell off and FAANG, the same thing. Now the banks, I do think whenever you get a gap like this, I don't know. I don't think this gap will hold up, right? That's why I would say be careful. You may get a big bounce back in Goldman Sachs. So if I was to go to, let's bring this back in 5 months. Let's put some indicators back on the chart. So right now Goldman Sachs is oversold, right? If we look at the hourly, it's way oversold. You may be able to come in here and and get long. I just don't want to do a $5 wide spread. And this you can get this five, like if you wanted to play a bounce in here, you could come in here and buy this $5 wide spread, buy the 53 delta, sell so go one in the money, go one outside the money, 31 days for 252. So basically you're paying $252 for something that's for a box, like for 550. You're risking 1 to 1 because you'll be able to make 248. So I was making this trade. I would probably come and back it down to 250 and see if I could get filled there. The only thing I don't like about this is there's not a whole lot of liquidity right here. So you look at the price. You got a $3. So basically you got 210, 295 market. So that means there's $85 in between that spread. Like those type of spreads, that's a market maker's dream. And you can get priced out pretty bad. Like you can end up paying a bad price for a spread like that. And I don't like the liquidity here. So this isn't something that I would like to do. Also, um, let's look and see it got a 3-star on the liquidity. So I just don't like that particular, and I'll show you why. So look, I just pulled up that in Goldman Sachs. Let's say you wanted to do a call spread in Apple. Let's say you want to get long Apple. We'll go 31 days. Same expiration. Now look at this. Look at this spread. Now, this is the importance of liquidity. You see down here at the bottom, we got you see how the mid price is 248. It's bouncing around. But the 240 and 255. Look at the tightness of that spread. So now you got a difference of about $15 on that spread. So now that's a way smaller range, right? So that's the difference between, basically you can get filled at 240 or 255. So I would come right there in the middle, right around 247, 248. I probably would come lower and work the spread. Try to get filled at 245, maybe 244, and come lower. You wanna when option trading or buying stocks, you wanna be in liquid stocks. You wanna be the more liquid it is, the better it is for you in pricing, so you don't overpay for something. Uh, that's very important. That's why I don't like trading things like, let's look at GME. Let's go 31 days. Same type of spread. Look at this. You get you anywhere. The low is 95 cents and the high is $4. That's what I'm talking about. And so and the market is that's a crappy market to try to do a spread in. That's crappy. It's just not. It's only $100 stock, so the markets shouldn't be that crappy in there trying to get this spread done. So that's $100 stock. Let's go to something like, let's look at the IWM, which is a $210 stock. 31 days. Look at this. So 107, 116. That's just a $2 wide. Excuse me. We could go. Let's go. Let's do a $5 wide. Doesn't matter. We go 20. Let's go 209, 213, 214. All right, $5 wide. Look at the low. 266, 278, 264. See, it's bouncing around between like 12, 13, $14. Right? So the middle would be about 7. You, that's where you want to be. You want to be in tight markets, so then that you don't end up overpaying. This is the thing. These are some of the things that they don't tell you, like on TV. That's why those markets are horrible to be trying to trade in. Look at look at the open interest. We got thousands, 1.78 thousand, 1.61 thousand, 1,000, 3,000, 3.5, 34,000 right here. You got thousands of contracts being traded already today. On the put side of IWM right here at 210, you got over 2,000 contracts. Now, I'm going to show you some unusual option activity as well, live, and I just seen it, right? Let's see if I can pull up if it's going to come up, my little EpiPen. All right, it ain't working. So if you look right here at the 205 strike, come on, pull up my there we go. I want to pull up my pen, see if it wanted to be real fat. So right here, this is today, 205. We got 36,000. What's going on? Come on now. There we go. Right here at the 205 strike. See this? It's 36,000. 36,000 options have been placed at the 205 strike in the IWM. Here's another 30,000 right here. That's unusual option activity. And I'm showing you that live. I had no intentions on putting that on right here. So I'm guessing I don't know if puts have been bought here, or if someone are selling these puts trying to get long. You could have people getting long, buying the dip with options, sell a put to get long. It's possible. Or either they could be buying them as well. You could be going in the money thinking that IWM is going to continue to sell off, right? Although I'm gonna, if I had to make a guess, I would guess that these puts being sold, people are coming in buying this, right? And I'll show you, and we'll look at the chart. Let's see if I would agree in the short term, right? Because I'm just talking about trading. Long term, I do think that the market I do think we're in bear market conditions, and I do think that we'll continue to sell off over the course of this year, at least to the first part of this year anyway. But let's take a look at IWM. So, see, I already got this queued up. Let's see. Let's go to the daily. We're in a 5-month, 5-month daily. Here we go. Put it out, draw it out some. Guys, see that? So I drew this maybe, I don't know, messing around last week. So I got trend lines drawn here and then here. And so you got a breakout right here. It came back up, retested, and it's breaking down. So I say I don't really know. Let's back this out 3 years. Man, oh man. And so that's what I'm saying. That's what I'm talking about right here. We haven't we have people panicking. I've been watching CNBC, and we haven't even had a real sell off. This sell off is just getting going. Like, it's just getting good. Because if you look here, look at from down here where this little doji candle is right here at 142. We all the way up here at 210. We got a long ways to go to retrace some of this, right? So that's one of the reasons why. And I would say I wouldn't have sold a put at 205. If it was me, I probably would have sold a put like maybe a here at 195. Right here where the gap is. So let's come right here. And I'll leave this on the chart, and then we'll see what happens if the market gets here. We'll come over here to about what? 200. Highlight that area right there. That's where I would look for my bounce in the IWM. I will look for my bounce here. That doesn't mean, because you still got a lot. This is heavy support. So maybe that's why they sold their puts, right? Because you see where the market came right here, bounce back. Wick. Anywhere you see these little wicks, bounce back, wick, bounce back, wick, bounce back, wick. So it's right here into a heavy consolidation area. So you could get a bounce right here. So maybe these guys sold puts, came in here and sold a put, get a bounce right here. And they'll make money on that. That's one way of getting long without actually buying shares, right? I don't think I would have sold that put myself, but you could get that. This is my area right here, right? This is an area right here where I think we'll get a lot of support right here where it gapped up. And then you probably get another level right here. And I'll probably mark something up like this and post it to Twitter. So Twitter is a little bit like, is another way to follow me and get these. Hey guys, hit the like button, hit the subscribe button if you're watching this right now. I'm giving out some pretty good jewels right now. The market is continuing to sell off. Got the S&P 500 futures down 1.5% now, down 73 handles. The NASDAQ is continuing to sell off. I don't know if some news or something came out since I've been doing this. Everything's continuing to rip to the downside. And this is what happens. This is some good work we getting today. Let's see. I'm gonna hold this position. Now remember, I got a working order already set up. So it'll take me out. If we get this big sell off, it'll take me out. It'll take me out of this trade. And so you might be asking now, why not just hold it and try to make all of the profit? I could do that for 31, but a lot can happen in 31 days. I'd rather take 50% and then reestablish another position, right? I would rather like maybe take my 50% out of it and then establish something like an iron condor or something like that. Get on both sides of the market at that point. Let's see. Right now, the XLE is still holding. It's down a little bit, but it is overbought. So if you look up here at the top left of my screen, it's red, right? That's because it's overbought. So we got and that's just with a RSI. All that is, look down at the bottom. This at the bottom is your relative strength index, RSI. You see this yellow line up above this red line. It's overbought. So for me, if I was long XLE, if I was long energy, I'd be taking profits right now. Taking profits, or this may not be a bad area to get short, right? Get short into this string. Bitcoin right now is getting hammered. I think that, just I do think that as long as Bitcoin goes down, I think that tech will continue to go down as well. I think the two are moving with each other. So you're gonna get hammered in tech. You're gonna get hammered in Bitcoin if you own both. Right now, Bitcoin is not a hedge for our markets. I was listening to I think it was um not Jeff Gunlock. He did an interview with Yahoo Finance, and I was listening to him, and he was talking about getting exposure to maybe some international stocks or something like that to kind of hedge. That may be an option. Right now, if we look at everything that's green, oil is continuing to go up. Oil may continue to go up. So if you can get some exposure, even though I wouldn't get long oil right now with it being overbought, that doesn't mean it can't continue to go up. I would just rather see it come down, and then I get, establish a position. Gold is up a little bit today, although gold over the past 3 years has been getting killed as well. It's kind of like in a little range that it hasn't come out yet, right? So we kind of want to see it get out of this range, and then we can see gold really take off. But right now, that's not even a hedge for our positions. So, hopefully you guys got something from this video. I will once this position closes in the SPY, I will establish another position. So if you're watching and you're saying, well, man, I want to put something on today, what would you put on today? If I had to put something on, I really like this. I really like getting short in Microsoft. Um, I really like you do have earnings coming up, right? On the 25th. So you have to be careful with that. You could get a big, I don't like getting putting on trades right before earnings, because earnings could do a lot. You can get some type of number and then it just mess up your whole trade, right? So I'll wait until after the 25th maybe, and then I'll look to maybe establish something in Microsoft. So we got another week or so. But if I had to make a trade or something today, I would probably see AMD got earnings coming up. Nvidia, I would probably go somewhere like in Nvidia. And if it was, and I had to make a trade today, I would come in Nvidia and do something. You can come in Nvidia, and I would get short, or either do a iron condor, maybe do something like come out here and, I don't know, sell the expected move, this little ruler right here. You could do something like sell the 295, buy the 300. I wouldn't even do that. I would come way out here. I would sell the 310, buy the 315. I just sell one, do a standard deviation, iron condor, collect a buck. Yeah, I'm risking. If you want to risk, because I think that you could get a big move. So risking 4 to make 1, people to say that's crazy, but I like having high probability trades. You rarely. This doesn't mean that you can't lose. It just means that the market really got to beat you. So I'm so far outside of the expect. I'm literally, well, you see this blue dotted line, that's one standard deviation. So I'm selling like a one standard deviation um iron condor. And if you don't mind, like if you got a large account, right? Delete the buy, don't buy, just do a strangle. Sell the 310, sell this 215, and collect $620 in premium. Your buying power is about 2,600, which really, that's not that bad for what Nvidia can do. That's not bad at all, because you're collecting almost 25% of what your risk is. Almost to it, almost maybe about 20% of what you're risking. So that's about 1 to 4, right? Which is what I was doing with the iron condor. So, and you can see this green area right here. This is where the market, that's where you're good. The market got to come out here to beat you. Where you see red, that's where you would lose money. And so we'll mess around with it. Just continue to monitor the right now. This is the third trade that we have on in this account, and I'm pretty confident this is gonna be a winner. But we'll wait, and then once we ring the bell on this one, we're gonna go move right into another one, right? So right now we got 2 trades on, so 2 trades that we've had as winners, and we're on our third one that's winning right now. We'll sit with it. We'll ring the bell, ring the register on that, and then we'll apply something else. And then, I'm showing you guys how to manage a small account, make a little money while you can scale this. You can scale this. You have a large account, scale it, right? And with that being said, hit that like button. Go down there and press that like button. Subscribe, share this video. Let people see like this guy on here giving us trades. He doing trades live and he's showing us what's up, doing a little technical analysis, the whole nine. I appreciate all the support. And with that, guys, I am out. Peace.